On this episode of Playbook of the Wealthy, we are talking about Wells Fargo, government checks and how they're stopping, your homeowner's insurance now costing you the price of having a child, and the economy versus the stock market and how they are not linked at all. We'll see you on the other side of the intro. Welcome back to another episode of Playbook of the Wealthy. My name is Dave Grant. My co-host is Heather Townsend. Today, we are talking about hot topics in the financial world. We've been reading, we've been gathering some stories, and we're going to tell you about it and how it impacts you. Our podcast is usually split into a bunch of sections. Today, we are just going all in on this news, and then we're going to kind of give you a brief update of what we think is important in our world about us. So sit back, relax, and get outraged with us. Heather, are you ready to dive into this content here?
I am outraged. We're outraged.
Yeah, we got to do some emotion, right? We're not happy about this financial news, just based on what we got. But
okay, some of it I am. The first one I might get a little fiery about.
I'm ready for it. There's going to be emojis flying across the screen. I'm going to do some post-edit sound effects, fire coming out your ears.
Are we ready to dive in? Am I allowed to dive in, Dave?
Nope, you did it last time. Let's dive in.
So I wanted to share about Wells Fargo today. For anyone who doesn't know this about me, I am not a fan of Wells Fargo. In the forums of NAPFA, which is the National Association of Personal Financial Advisors. Did I get it right, Dave? Yeah.
Yep.
So in the forum, I found this so fascinating that I wanted to share with our listeners because a huge thread was going on about Wells Fargo and fraud and how horribly they've been treating it. And I just feel so bad for this guy. He's going to get a lawyer involved. So basically, Wells Fargo had not acknowledged debit card fraud on his wife's bank account. A replacement debit card was sent to them because it was expiring. Makes sense. But of course, they didn't receive it. So it was used at an art gallery in Florida for thousands of dollars. The guy calls Wells Fargo within 2 hours, reports the incident. Canceled the card, opened a fraud case. 10 days later, they receive word that there's no fraud, closing the case, not going to get their money back. And the only way to receive information of why the investigation, deemed that it was not fraud is they had to wait 30 days to receive it by mail, the same mail where their card was stolen.
That's crazy. Why would you commit fraud in an art gallery of all places and then say that it wasn't me? No, I do it something in my criminal mind. I'm going to do this on things I can easily hawk through my fence. See, I'm using the terms now. I'm going to buy a whole bunch of TVs and then you can sell them illegally and then you can keep the cash and then commit fraud. You wouldn't do it with an art gallery. That doesn't make sense.
It is interesting. I actually thought that was smart because art's probably worth a lot and then you can go sell it for more. The point is Wells Fargo here, Dave. Okay.
Sorry. Yeah.
And then another advisor jumped in and was like, another family member's identity was stolen. They had to help the family member deal with it. He was like, I'm not going to bore you with the details. Wells Fargo got an F- and we have moved all our money out of Wells Fargo. Why I'm bringing this up to our listeners is these are stories of many that I've heard over the years working with clients, seeing things happen to my clients with Wells Fargo. I don't like them as a bank. I'm being honest.
I agree.
I also want to say, if you are using your debit card for transactions, just don't. Because dealing with fraud, and probably all banks, some banks are definitely better than others. But if you have Wells Fargo and you have to deal with it, listen to this man's story. Thousands of dollars out of cash. This is why I like to use credit cards, right? You're not out of your cash to pay your mortgage. It's not out of your cash. So don't use debit cards for transactions. Use credit cards. Pay them off every month.
Dave Ramsey followers are going to be yelling at you through the screen right now.
I understand that. But on this topic, though, I just have to share from my cybersecurity concierge. There's a new cyber attack way going on. It's called quishing.
Sure it is.
Do you think I don't know if I'm saying it right? Quishing. QUISHING QR codes. That's smart. Because think about it. I didn't even think about this. There's a QR code at a restaurant for a menu. I just put my phone up there. Someone didn't slap me.
The only malicious QR code I've had, it just sends me right into YouTube and just rickrolls me. And I'm just annoyed. Do you know what a rickroll is?
No. That's why my face didn't get phased.
I noticed the blank expression. Don't worry, I'll rickroll you in a minute. Everyone's going to see this on the screen of what a rickroll is. Okay, so you send someone like a serious link and you're like, I need you to take a look at this. And it sends them to the YouTube of the video of Rick Astley and Never Gonna Give You Up. That's what rickrolling is.
Oh, that's funny.
Yeah, it's been around for like 15 years. Where have you been? All right, changing speed. We're talking about the Treasury. As of the end of September 2025, they're switching things up. They're pretty much saying paper is a thing of the past. We're no longer issuing checks and we're no longer accepting checks. And they did this on the sly. I found this out 2 months ago by randomly reading some financial planning blogs. And yes, they issued the executive order, but I sent a link into Discord into some advisor groups and they're like, I haven't even heard of this. So it's pretty much going to be your Social Security benefit, veterans benefits, your estimated payments. You should be doing all these digitally because as of September 30th, the Treasury is going to start not accepting them.
And I looked into this. The reason for this is, and this is written in the executive order. Historically, Department of the Treasury checks are 16 times more likely to be reported lost or stolen. 16 times is a lot. Returned, undeliverable, or altered than an EFT, electronic funds transfer. Maintaining the physical infrastructure and specialized technology for digitizing paper records cost the American taxpayer over $657 million in 2024. This makes sense to me. We need to move to the world is digital these days.
Yeah, I get frustrated when you have to give someone their tax return and it's like, all right, here's all the coupons you got for your estimated tax payments. Don't send them all in at once. Keep them in a pile somewhere. I'm like, no. Here's the link. Just set a calendar reminder. Send a payment in on this date.
Direct pay. Yes.
Bear in mind, this is new. This has not been enacted yet. Or by the time this goes out, it might have started, but there will be some wrinkles. So do your best, but note that there may be some edits coming through.
Well, and in my CPA forums, I'll just read. The IRS has until September 30th to determine how this will be implemented. There has been no guidance to date. That was of 8 days ago.
Sounds about right.
So in the pretty bow, though, if you are receiving any government checks, Social Security or veteran via checks, go online, update to your bank information. To be safe, pay your estimated tax payments going forward electronically rather than checks going forward.
All right, before we move on to our next point, if this is your first episode listening to the podcast, hope you're enjoying it. You don't have to do anything. If this is the 3rd, 17th time you've come back, or whatever it's going to be, you now have to do something. You've got to like, comment, subscribe, follow, or send it to a friend. You don't have a choice. You're not allowed to move forward. Don't collect $200. Don't go past go. Go ahead and do it, and then keep on listening.
All right, next one. Came across an article. It was in Barron's, and then Michael Kitsitz, who Dave and I follow, a nerd in the financial world. He's amazing. Property and casualty insurance continues to outpace inflation. Listeners, I know we probably all know this, but I wanted to share what you can do about it and what you should be doing to avoid, hopefully, unnecessary increases. So really quick, from Kitz's summary of the Barron's article, according to data from the Bank of America Institute, median auto and home insurance prices rose 6% during the 12 months that ended in May, well outpacing the broader inflation rate. This jump is on top of increased costs experienced during the previous few years, as well as the median premium payments up by more than 40% in total since June 2020. Up more than 40% since 2020. That's a lot.
Okay, when did you feel your most recent increase? Mine was last year. It went up by probably like 25 to 30%.
Where I noticed the most is I used to feel that my umbrella wasn't very much. It was like a few $100. I think it was like $500, $600, $700, something like that. Granted, I do have a 2 million umbrella, but umbrellas I used to never even notice.
It used to be like $100 per million. Like it used to be
Yes.
really cheap.
Yes.
And even when it was saying, it rose 6% in the last 12 months, I was like, I would have loved it to have increased 6% over the last 12 months. The last 2 years have been really big increases to where it's getting close to double what we paid 5 years ago.
And you just had something with your house that I wanted you to share too.
Oh, my house. All right. So we had a huge hailstorm that came through. It was kind of like a micro storm that hit part of our town. Insurance companies are getting very sticklers. Very stickler, that makes sense. They're getting very particular about what they allow through in a claim. So we had a roofer come through and he's like, all right, all your siding's broken here. I went up on the roof. I can see the divots from the hail and in your garage door. The insurance adjusters came through and they're like, your roof is fine. Like there's not damage caused by the hail. Yes, there's slight denting. And then also your siding, yes, it's broken. We will gladly patch that up for you. I'm like, is it going to match? And then we go down this whole road.
Oh, no.
I'm like, this is a joke. Like, am I ever going to be able to claim anything unless my roof rips off? Give me something for this increased premium. Come on.
Which is what I wanted to share with our listeners. I'm going through this with one of my clients because they're adding on a student driver. You've just recently adding a student driver or a 16-year-old, 17-year-old to your home insurance or auto insurance already was shocking. This is another level. I think it went up 4x for her. I'm not kidding. And so we're really, really reviewing it. But going back through, there were claims 3, 4, 5 years ago before she worked with me that were small things like glass. Yeah. And it's really hurting her right now. With this increase in cost, definitely shop around, make sure you're not overpaying, but still definitely keep proper coverage. It's important. But if it's glass, a few $100, even $1,000, I don't think it's worth it to put it through the insurance. That's what emergency savings and cash is for. Don't put small claims through right now. That would be my recommendation.
Yeah, I mean, I just added a young driver and a Tesla to my car insurance. So you know exactly what's happened to mine. Teslas are very expensive to insure because of the amount of glass and technology in them. And if that goes wrong, the car breaks down. So it is expensive for reason on some aspects, but there's also a case of, yes, you have to bank this into your everyday payments now. Like insurance has gone up. There's no getting away from it. And it's gone up across the board. And the worst case scenario is you get dropped. If you're in the coastal areas, you may be lacking resources of what insurance company to use because some are just pulling out completely. All right. Something I get asked a lot is when the economy does something, why doesn't the stock market react in kind? That's because the economy and the stock market are not linked. And that's something that is weird because you would think the stock market is companies that are involved in the economy. Why would it not just be knock-on effects?
And you found a great article from The Atlantic. And I'm just going to read this section really quick. They put it so eloquently. The U.S. economy recently weathered the worst pandemic in 100 years, the worst inflation in 40 years, and the highest interest rates in 20 years. Yet, from 2019 through 2024, the S&P 500 grew by an average of nearly 20% a year, about double its historical average. So you have the worst inflation, a pandemic, interest rates, but the average return was double.
So let's unpack that. The economy as a whole hasn't been great, but the companies leading the stock market have been amazing. It's all AI focused. So you're looking at the Mag 7 plowing all their money into AI, making sure that this is something they're on the forefront of. And that's what's driving the stock market. If you look at the S&P 500, it used to be kind of even, for most part, across all companies. There was some companies that took a bit of a lion's share, but now the Magnificent Seven is 30% of the S&P 500. So there is a concentration there. That is abnormal given the size, the 30%, but it's not abnormal to have some sectors leading the S&P 500. Now, you'll go through periods where it's energy or it's industrials or it's financials. That will happen in various sectors as we go through various different cycles. But given the fact that it is 30% of the S&P 500, it's concerning me a little bit. So one thing that was mentioned in the article is how passive investing is kind of driving this as well. It's just reinforcing the concentration because people are not taking money out of winners and diversifying. People are just investing in the S&P 500 and just plowing money into that, which just makes that grow and exacerbates the concentration.
It's always been this way, that a disproportionate share of companies have been responsible for the gains in the stock market. It's always like 1% to 2% of companies are responsible for the vast majority of the gains in the stock market. Mm-hmm. But what's going on right now is never have the gains been so intensely concentrated.
Agreed. I think if you strip the Mag 7 out, some of the years have been flat over the last couple versus the 20% and the 10% that we're feeling right now. So it's great that the returns are there. It's also the concern of, is this creating a bubble in the stock market? Or is this diverting people's attention to say the stock market's great, and a lot of people are feeling that the economy is going towards a recession? And so it's confusing to look at them both.
This is always how it's been, though. What you read in the headlines or what you're feeling and what the stock market are doing most of the time don't match.
And so that's, I think, when we tell people, do not react to what you hear on the news.
Predictions are wrong most of the time. The data's been there.
Well, even investing on headlines. If you're hearing, okay, jobs reports weak, inflation's going up, if you start to invest based on those headlines, the stock market can actually do the reverse because it's pricing in the future. So right now, the stock market is pricing in AI. It's pricing in interest rate cuts, which will come if the economy doesn't do well. So it's 10 steps ahead of what it thinks the economy is going to do. And if you start reacting to headlines, you're going to miss out on what's actually going to happen. All right, we got a fun term for you. The old term that people love is called job hopping. That's where you pretty much stay at a company, shop yourself around to a different company, find a better offer, and jump. Now, with the economy slowing down, it's called job hugging, which is pretty much you find a job and you don't let it go. You give it a hug, you accept any raise you get. You're not looking to shop yourself because chances are you'll be at the bottom of the totem pole, and when there's cuts, you're first to go.
It's a cute name. Job hugging.
I think it's great. I think it resonated pretty well. And then the image that came along, it was Market Watch, I read about it. They had a guy hugging his computer. I'm like, yeah, that pretty much sums it up. People are getting a little nervous out there.
I have a client that is in the recruiting industry, let's say, and they were talking about it. And they were like, Heather, people aren't moving. They're not moving from their jobs. It's a real thing right now.
Mm-hmm. It's interesting. Different parts of the economy are doing different things. Yes, there's some areas that are doing layoffs. I had one client accept a job offer with a substantial raise to move to a different company in the same industry because she was so skilled and so revered in her field. So if you've got the skills, if you've got the network, this may not affect you if you're in the right industry, but some industries are going to be hit pretty hard.
Okay, hold on. You're a movie person. What's the movie where someone famous is in it? And
really? Okay.
Okay, granted, that was a really bad. Okay. I just couldn't remember the actor's name, but they're a company they go in and lay off people for the company. Do you know what I'm talking about? And they fly all around. Have you heard of
George Clooney? It is Anna Kendrick, because she's the star of that movie. George Clooney can kick rocks. It's called Up in the Air.
Up in the Air. Oh my gosh, you were so good at this. All right. When you look at that movie, I've never been on the other side of layoffs in the sense of I don't know how companies do this.
That
Yes.
movie is terrible because his love interest is actually having an affair on her husband. And so he goes and declares her love to her at the end of the movie, and she has her husband in the background behind the front door.
I don't remember that.
Watch the end of the movie. But why would you care about that? Because Anna Kendrick's in it, and she just runs that movie. She's great.
Wait, is that really true? I
What?
thought they were just friends in the movie. That's how it ends.
Because she's married.
Yes. But
She was going to say, I want a relationship. I love you. And I've never had this before.
Okay, I don't
Now I'm going to
remember.
need to go rewatch the movie.
Yes,
And
now
then
we've
because
gone on a tangent. Okay.
And now because Anna Kendrick is in it, then that's going to make me watch Pitch Perfect 1, 2, and 3, which probably is one of the greatest movie franchises of all time, behind Fast and Furious.
Oh, Fast and Furious is good. Okay, we're going on a tangent. Can we go back to job hugging really quick? What I was saying with this movie, I have never been in corporate America on the side of layoffs, planning them, deciding them. So everyone take that with a grain of salt. But if it's anything like that movie, I imagine it comes down to numbers. Who's highest paid? Who do we need to cut? I don't know if loyalty comes into that.
So your takeaway with the economy and the stock market, they are not tied together. Do not invest based on stock market or economic headlines that you hear in the news. You may get some concentration in the S&P 500 with the Magnificent Seven and tech as of right now, but that always happens. It's just different sectors rotating through. Stay diversified. Stay on your investing track and do not get distracted.
That was so beautiful.
Thank you. All right, we're going into the last section of our podcast. It is called Highlights. This is where you get to know about us personally. All right, I'm going to go first. I have a professional and a personal update, and I will keep them brief. I just got done with the TPCP designation. It almost makes me think of Native Americans when I start saying it. It's the TP? No, it is the Tax Planning Certified Professional designation.
Congratulations.
Thank you.
Did you learn a lot?
There was some nuggets in there that I'm like, I didn't know that before. And I actually used some of it in a client call the other day. So I'm like, well, I'm glad I got the refresher.
What was one of them?
It was HSAs and how to mess up the beneficiaries on it and how it can cause some weird tax situations. So that's professional. Personal, Paramount Plus, there's a show called Mobland. I tend to binge shows when they are completely released of their episodes. I don't try to do an episode at a time. So this one, I love how you know actors and actresses, so this might not mean much to you. But Pierce Brosnan, Helen Mirren. Yeah.
Directed I know Pierce.
Okay. Yeah. Directed by Guy Ritchie. No? Tom Hardy. It's a great show. It's really dark. It's all about the mobs in England. It's current day, but that was really good. Probably one of the best shows I've watched in a long time.
So I did a thing. I don't know if I'm going to like this thing, but everyone's telling me I need to do strength training because I'm nearing my 40s. And this is when women typically lose a lot of muscle. So I found a gym where you're kind of like with a personal trainer, but with a group of women. And in October, I'm committing to 3 days of lifting with a personal trainer and a women group. Me and lifting, I mean, I'm a yogi. I go to Pilates. This is weird. I get in machines, like lifting machines. I got in the leg press the wrong way.
Okay. So, how did you get in the wrong way?
I don't know. I'm really smart with numbers. I'm not the most coordinated person.
Okay. And you're a small person too. So are you going to get buff?
No, I said I don't want to bulk up. I made that very clear. But I don't think it's a bad thing for me to build a little bit of muscle. I think it's a good thing for a woman. And the way that I'm doing this for longevity purposes. I'll be interested to see if I like what it does to my body.
You'll be shocked at how hard it is to bulk up.
That's what they told me.
Yeah, you have to eat a huge calorie excess and train ridiculously hard. Having a high school footballer, it's very difficult. So
he nicely said, he's like, Heather, your genetics and body won't let you bulk up. But I mean, I don't even want like 10 pounds of muscle added. I just want strength training. I just want to be strong and healthy.
Well, for the older crowd who's listening, the highest chance that you are going to have difficulty in later life is the strength of your legs. Because if you fall down and you can't get up, life's going to go downhill. So make sure you got some strong legs.
That's why I'm doing this. I didn't want someone to help me have to get off the potty when I'm in my 70s.
That's some forward thinking. You're not 40 yet. On that note, thank you for watching this episode of Playbook of the Wealthy, or listen if you listen to the podcast. If you want to figure out where you can find us on an ongoing basis, you can find us on whichever platform you listen to podcasts. If you want to watch us on a regular basis, we are on YouTube, Instagram, and LinkedIn. Make sure you subscribe. If you want to contact us, ask us any questions, send us some feedback, you can do. We are at hello@playbookotw.com, and we'll see you next time. Jordan is coming up. Make sure to listen to him. He has some important news.
Toodles!
All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. This podcast is for informational purposes only and should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain positions in the securities discussed in this podcast.